Okay, so you want to talk Warren Buffett.
Yeah, let's do it.
Let's talk about how the Oracle of Omaha might have just made a multi-billion-dollar oopsie with Apple.
Yeah.
We're going deep on this Motley Fool article.
Yeah.
And trust me, it's a wild ride.
It's certainly raising eyebrows on Wall Street. Everybody's trying to decipher Buffett's playbook, you know?
Right.
What is he seeing that we're missing?
Because here's the thing. Buffett loves Apple.
Yeah.
I mean, he's called it Berkshire Hathaway's third business in the past. But this year,
Right.
Berkshire has been dumping Apple stock like it's hot. Hundreds of millions of shares gone.
Yeah, the article estimates they've potentially missed out on a cool $16 billion in gains by doing this.
Wow.
This isn't just a minor portfolio adjustment. It completely contradicts his previous bullish stance on Apple.
It's huge EE. So what's the logic here? The article mentions Buffett hinted at higher capital gains taxes earlier this year, but that doesn't really seem like a major concern now, does it?
Not so much. The political winds have shifted since then, making that less likely. The article suggests a more compelling reason. Buffett's feeling cautious about the market as a whole. We're in a period of historically high valuations, which makes it tough to find those undervalued gems Buffett's known for.
So is he thinking Apple is overpriced, even though he's a fan of the company long term? That's fascinating because their stock has been on a tear lately.
It's classic contrarian investing, which is a Buffett trademark. He's famously said, "Be fearful when others are greedy." While everyone's chasing the next big winner, he's looking for potential risks that others might be overlooking.
He's playing 3D chess while the rest of us are still setting up the board.
Right.
But here's where it gets even more interesting. It's not just Apple. Berkshire Hathaway has been trimming down its holdings in other companies too, including Bank of America, another Buffett favorite. What does that tell us?
That's the real tell, isn't it? This signals a broader strategy, a potential shift in his investment philosophy. It suggests that Buffett isn't just concerned about individual companies. He's apprehensive about the market as a whole.
Okay, so he's like hitting the brakes on the whole market.
Yeah.
Does that mean we should be bracing for impact? Like, is this a market warning?
Yeah.
A giant neon Buffett says sell sign?
Yes, some analysts are definitely interpreting it that way, and it's definitely something to pay attention to. I mean,
Right.
the S&P 500 just had its best year in almost 3 decades, according to the article. So
Yep.
when everyone's riding high, Buffett's the guy who reminds you what goes up must come down.
It makes you want to grab your emergency kit, right?
Right.
But then again, the article also mentions there are still signs the market is strong. Like tech companies are posting record profits, and the Fed might even lower interest rates, which usually gives the market a boost. So what's the real deal here?
Yeah, it's like a tug of war between positive momentum and underlying anxieties. And this is where understanding Buffett's long game is crucial.
Yep.
He's not reacting to short-term blips. He's looking years, even decades ahead. He's asking what could fundamentally change the game, even if it's not obvious yet.
So is he seeing something on the horizon that most of us are missing? What could cause such a drastic shift in his strategy after being so bullish on companies like Apple?
That's the billion-dollar question, isn't it? One possibility the article hints at is that even though some sectors are booming right now, he might be seeing vulnerabilities in other areas that could ripple through the entire market. Think of it like a game of Jenga. Even if the tower looks stable, removing the wrong block could bring the whole thing down.
And he's looking for those potentially wobbly blocks that most people haven't even noticed yet.
Precisely. He's famous for saying, you only find out who is swimming naked when the tide goes out. He's not saying the tide is going out, but his actions suggest he's getting ready just in case.
Wow. That's a pretty powerful image. So how does someone like you, or even someone like me who isn't a billionaire investor, make sense of all this? What are the key takeaways here? So if Buffett's out there like looking for these wobbly blocks, what can like the rest of us do? Should we all be selling off our Apple stock and stocking up on like canned goods?
Probably not. I mean, we're talking about managing risk here, not predicting, the end of the world.
Right.
This deep dive isn't about just blindly copying Buffett's every move. It's about, learning from his thought process.
So how do we apply that to our own portfolios?
Well, it starts with asking the right questions. I think this article highlighted how Buffett's looking at the big picture, right? He's factoring in potential risks that a lot of other people might be ignoring, and that's something we can all learn from, regardless of how much money we have in the market.
So instead of just chasing the latest hot stock tip, we should be thinking about the bigger picture, the bigger economic forces at play.
Exactly.
What could disrupt the market even if things seem great right now?
Exactly. Are we in a bubble that's about to burst? What impact could rising inflation or geopolitical events have on different sectors? How would those potential risks affect my investments based on, my own risk tolerance and my own financial goals?
Just like doing a stress test on your portfolio, right?
Exactly.
Seeing where the weak points might be.
And, if you're not sure how to assess those risks for yourself, that's where seeking advice from a financial advisor can be helpful.
Yeah, that makes sense. But let's be honest, even with all the research and planning, there's always an element of uncertainty in the market, right? Nobody has a crystal ball.
That's absolutely true. But that's where, even though Buffett has made billions, he's also comfortable with the idea that he's not going to be right all the time. He's not afraid to make big moves, even if they seem counterintuitive at the time, because he's playing that long game.
So the real takeaway from this deep dive isn't, sell everything or buy Apple. It's about understanding the forces at play and making informed decisions that align with, your own personal financial goals.
Couldn't have said it better myself. Don't just follow the herd, even when the herd is following Warren Buffett. Do your own research, think critically, and remember, the most important investment you can make is in your own financial literacy.
Words to live by. That's all the time we have for this deep dive. Until next time, keep learning, keep asking questions, and happy investing.